Sorry.
Hey, welcome back to Midas Letter Live. My guest in this segment is Steve Hawkins. He's the CEO of Horizons ETFs Management Canada, who, among other ETFs, manages the Horizons Marijuana Life Sciences Index ETF, trading on the TSX under the symbol HMMJ. Steve, welcome to the show.
Thank you very much for having me today.
So an ETF is, to put it most simply, a safer way to play the cannabis space.
Absolutely. It provides you diversified exposure to a number of names in the sector. And this is a new sector as it evolves in the Canadian marketplace.
Right.
The Canadian regime, capital markets, has significantly taken a nice foothold into the cannabis sector as we now approach recreational legalization. But the true fact is, an ETF is a mutual fund,
right.
But it's listed on the stock exchange. It gives you intraday liquidity, so you can buy and sell during the day, not just at 4 o'clock like a normal mutual fund.
Okay.
And it provides you diversified exposure to a basket of securities in the cannabis industry. Like currently, right now, we have 49 different cannabis or cannabis ancillary companies in the portfolio.
Okay, so you were talking to me before the segment began that you're the largest single holder of Aphria, Canopy Growth, and Aurora as well?
Yep, and Kronos. I mean, our ETF is almost $1.1 billion. That makes us the largest cannabis asset management company in the world, and the single largest institutional holder of all of these different individual companies,
right.
Which also makes us the largest securities lender on the street. So here you are, companies that are held in our portfolio, and we are generating somewhere between a 5 and 10% yield on non-dividend paying stocks by lending out their securities to the short sellers in the marketplace, who I'm not sure that I would take the chance of short selling a marijuana stock, but there's a lot of people that are doing that, and
there's one I want to short, which I won't talk about here because I don't want to tell everybody. But so if that's interesting. So you're probably one of the best guys on the street to call to find out what the cost of borrow is on any given marijuana issuer.
Pretty much, yes, every day.
Really? Well, we're going to have to chat more.
It's a big part of our business, and working with the banks who are holding onto our securities and actually facilitating the lending.
Right.
But when a corporate transaction happens, like Aurora buying MedRelief, there are many individuals who are long a big block of MedRelief and want to hedge that position out.
Sure.
So they'll short it at current market prices, and they'll pay a negative borrow cost for that hedge for, let's say, the time of period until the transaction closes, till they get their Aurora share. So let's say 90 days, 120 days, and they will pay me a fixed negative percentage amount for that period of time. And that amount can be huge. When Tilray spiked up to over $200, the borrow on Tilray was over 150%. So they were you were losing 150% on an annualized basis. So maybe, only 50% a day or 0.5% for a day. But that's still a huge amount of potential returns that you're giving up. The stock has to go up 150% just for you to offset that negative borrow cost. Yeah,
right.
Go down. Yeah, exactly.
Interesting. So what percentage of the $1.1 billion that you manage is institutional versus individual versus
retail advisors?
Retail advisors.
Yeah, those are really the three different buckets. So the direct investor,
right.
We now, because from a reactive basis, retail advisors are really starting to enter into this space because their clients are asking them to provide exposure to marijuana stocks, to cannabis companies. The direct investor, I would say almost 50% of our assets that came into the fund initially were based through direct investors, individuals. And then we had some institutions that were taking some short-term tactical plays and using our ETF as a play on the industry, primarily from a long position. But I think the single biggest growth aspect over the past 6 months for us has really been penetration into the retail advisor channel. And it's not because the banks want to sell cannabis companies or our ETF, it's because their clients are specifically asking the retail advisor, we want exposure to marijuana. And the retail advisor is saying, well, I don't know anything about any of these individual companies other than the rumors and the news articles. And so I'm not really comfortable in picking 1 or 2 or 3 different names for you in a basket. But here is an ETF that provides broad diversified exposure to the cannabis sector. And I think this is what, if you want to have access to the cannabis sector, I would recommend that you buy HMMJ, and I'll put this in your portfolio for you.
Interesting. So is the investment thesis behind this capital appreciation, or as you said, that you actually pay out a dividend based on the fact that you lend out your basket of stocks on a regular basis?
Yeah, we didn't even know that was going to happen when we launched the product. So that's completely ancillary benefit to owning the product. So right now, I mean, we launched it as a long-term growth prospect for individual investors who want access to the cannabis sector. You know, when I bought my original shares right near the start, you know, I bought it as a long-term play, even though it went up 25% in the first week. And then there's a lot of people saying, "Oh, I just bought it at $10 of the IPO. I'm going to sell it at $12.50 a week later." But you know, the stock has appreciated up to, I think the high was around 26 and change. Now it's around $24. But you know, the fund itself was still the best performing mutual fund in Canada in 2017 for that period, and on a year-over-year basis right now is the best performing mutual fund in Canada.
So what is the criteria for your investment into companies? Actually, I'll start there. What is the criteria for the investment into these companies? What disqualifies a company? What qualifies a company?
So there's a couple of different things. So we have to create a universe. So this is an index ETF. So there's not a lot of qualitative analysis that goes into the individual stocks that we pick for the portfolio, but the index determines what the universe is. And so all new cannabis companies, especially if they're production, cultivation, distribution in channel, they'll qualify in the universe. As long as they have to be listed on a North American exchange. So that primarily, and that's not over the counter, so that primarily means TSX, TSXV, CSE, NEO. So if they're in the universe of eligible companies, then it really becomes a purely quantitative decision of whether or not they go into our index or not. And that really is a minimum $75 million market cap, and then average daily trading volume of, I think, $250,000 over a 30-day period. We also launched an Ancillary ETF, which is a small cap version of this. So it's HMJR. So it's junior marijuana. And for that, again, from a quantitative perspective, you have to have a market cap between 50 and 500 million. And then you have to have an average daily trading volume a little bit less than what HMMJ's is. I don't know what the number is offhand. But again, the prospect there is these are companies that will sort of benefit from takeover action, from additional capital markets action for companies that you know, they've developed a new technology from a production perspective or refinement perspective that maybe one of the bigger players wants. So like we've seen some act like ICC, we saw it taken out, right? And HMJR had a much larger percentage weight to ICC in it than HMMJ did, you know, because both of these indices are market cap weighted, and both of the portfolios are market cap weighted. So HMMJ has a significant weight to Canopy, Aphria, Aurora, Kronos, Tilray because of the large market capitalization of those. Whereas JR really, it looks at the small to mid cap companies, if you can call them that, for the marijuana industry, and then it heavily weights, again, from a market cap perspective, the smaller market cap companies.
Interesting. And the ETF itself never goes short itself.
Absolutely cannot go short. So, you know, our job is to replicate an index.
Right.
And so we just own the companies that are in the index for the most part, and then we manage the portfolio in the weights according to similar to what the index is. The one biggest issue though for HMMJ is because we're listed on the TSX, and the TSX has been very public but strict about the rules of the operations of those underlying companies. So if one of those companies in the index is carrying on, maybe it's a Canadian company, it's carrying operations here in Canada, but it also has some ancillary operations going on in the US, it's trying to produce or cultivate or distribute in one of the states, it's carrying on actions here, that type of company is basically in violation of the federal rules in the US, as we know, and the TSX has taken strict rules that they don't want any of their companies listed on the TSX or TSXV to be operating in the US. So you have companies like Aphria, and I know you met Vic earlier, you know, they were carrying on operations in Florida and I can't remember the other state that they were in, but they had to spin off that business line to maintain their listing on the Toronto Stock Exchange on the big board.
Right.
If they wanted to do something else, they could have moved their listing to NAO or CSE, which some companies have done. But for us, if Aphria or Canopy, specifically started growing in the U.S. and distributing in the U.S., that would actually disqualify them from our portfolio. It would still be in the index.
Okay.
So we have to manage the portfolio very carefully for
Right.
those things.
Okay, well, that's a great introduction to the whole ETF, and I'd like to say that we're going to have you back as a regular guest, Steve, because you obviously know what you're talking about. Thanks very much for joining us today.
Thank you very much for having me.